Today's topic is controversial to some, and that's because we're discussing whether fractional gold is a good investment or not. Thanks for joining us, and before we begin, please like and subscribe. Helps keep the channel going and brings more content like this to you. We know from prior videos that there are some strong opinions on this topic, and we'd actually love to get the community's feedback, so drop a comment down below and let us know what you think about fractional versus 1 troy ounce products. Now, there are a few reasons why someone might buy fractional gold, and the reason why you're buying it does affect whether it makes a good investment. And the type of fractional gold product you buy may also affect whether it's perceived as a good investment or not. Let's start with the most prevalent debate, which is centered around premiums. Now, premiums do affect your ability to recoup an investment, and this is where most of the concern lies, and justifiably so. In general, the larger the coin, bar, or round, the lower the premium is, and this is because it's more expensive to produce the smaller pieces than it is the larger one. So people who buy larger metal bars get a discount on the premium. This applies to all metals, including gold, silver, and platinum. That said, if you're flexible on the products you buy and you're willing to do a bit of math, you can get lower premiums on fractional gold, sometimes even lower than the premium on a larger size. If you're strictly buying within a product line, such as only buying eagles, then you're going to be paying a higher premium on smaller sizes almost all the time. But if you're willing to buy a fractional bar or coin that's from a different product line, you can get similar premiums. For example, currently a 1 ounce gold eagle can commonly be found for somewhere around 8% premium, maybe a little over. A 20 franc gold coin, like a French rooster or Helvetia, can often be found at about a 7% premium. There are gold bars in the 10-gram size produced by mints like Valcambi that also have premiums in the same range. The point is, there are gold products available that are fractional, but have similar premiums to some of their 1 ounce counterparts. It's never going to be the case where the smallest coins have the lowest premiums in the industry overall. You're always going to find 1 ounce coins with lower premiums than fractional gold. But the point is, there are fractional coins with affordable premiums. When you're looking for deals and you want to do comparisons, you may need to do some math, as the best way to assess premiums side by side is to look at the percentages. Now let's consider the 5-year and 10-year case for a fractional gold owner, assuming they bought some slightly more expensive fractional gold at 10% premiums. For this assessment, we're just doing a look back years ago if you had bought a load of gold, held it for 5 or 10 years, and then sold it. The profit for the person who bought and held for 10 years with a 10% premium sees a 33% ROI. And for the person who bought 5 years ago and held it, they came out ahead at a 42% return on investment. So, is it a good investment? Well, if we define a good investment as one that makes you money, then yes, it was a good investment. Would a cache of 1 ounce coins with a 5% premium have been a better investment? Undoubtedly, yes. But not everyone can afford an entire ounce, so for the people who are buying fractional as an investment, it can still make financial sense. Now, someone in the comments is going to chime in that they're buying fractional for a different reason, and the above analysis may not apply. If you're buying fractional gold because you want an insurance policy for the worst case scenario, a situation where we are reduced to bartering with gold and silver for essential goods and services, then fractional gold has a completely different utility, and assessing it as an investment is probably a wrong approach. In any case, fractional gold scores high points for its accessibility as a way to affordably invest in gold, and we like that it can still return a positive ROI. Investors who want to maximize returns to the largest extent possible will probably prefer 1 troy ounce or larger coins and bars to reduce their spread and the premiums. That's all we have for you today. Please remember to like, subscribe, and share with a friend. Thanks for watching, and we'll see you next time.